Hey guys, Mike here. So another big week ahead of us, and we got a lot of big economic events taking place this week and news coming out, as well as we're going to hear from a lot of retailers on earnings, right? So we'll get to find out, will those recessionary fears get stoked up some more, or are we holding up and running those credit cards up even more, and everything's hunky dory and stuff. So we're going to get to find out this week. We're going to go through the futures chart, one of the indexes, and then some big stocks and stuff, as well as I'll give you a tip somewhere in here that you might not know about and stuff that might actually help you, especially on certain stocks, when to actually buy, believe it or not, or when it's kind of like a no-brainer to buy. And then, of course, I'm going to go in for sure, even my face on this video, because I'm definitely going to a rant because it's rare. It's very rare in an election year you get to have two idiotic suggestions from both parties, right? Basically identical suggestions for policy. And I'm like, wow, that rarely happens. So maybe you disagree with me, but I know why they're doing it. I just can't wrap my brain around why people would support that at all, unless of course it affects you. But one thing you might notice, the market melting up. Well, one thing that's helping it melt up, if you didn't see this is from Goldman Sachs. They actually help execute stock buybacks. And they've come out and even said that last week, especially during the drawdown, they saw volume spiking to a 2-to-1 ratio times what they were seeing last year at the same time, right? And you can see right there, this is the authorized year to date, and that line is already basically beating everything else. Only one other time, and that was 2022. So we are easily going to eclipse that right there. We're probably easily going to eclipse stock buybacks. And of course, it made sense to buy on the dip if you're a company, right? And so and we're talking about billions upon billions of dollars, right? And buying stock and stuff. And so that definitely helps hold things up for sure and stabilizes these certain stocks and everything. So that's one thing that's been going on in case you're unaware of that. Now, looking at the futures chart, in fact, I never look at moving averages on a future chart. I just do it on the indexes. But what's funny, I noticed on the NQ here is you can see that at 50 moving average, it really does respect the 50 moving average. That's where it's at right now. That's where it rejected Friday. When you just kind of scroll back, you can see, I don't know if you see that one right there, it was like to the penny rejecting. This one right here, bouncing, going, rejecting. And so, again, it respects. We'll see if we get above it. Right now, they're, green. They're pushing the futures up as they've opened up at 6 and everything as I'm recording this. But it definitely respects that moving average. So I'm going to take this off. We don't need that anymore. But, looking at this right here, pulling the fibs up and everything like that, what you'll hear people talk about is how they want to buy this at a discount, right? And it's been just melting up. We hadn't had those huge pullbacks to pull liquidity. It's been these shallow kind of pullbacks in a way, and it's left a lot of liquidity behind. And again, I mean, what you want to see if you're trying to buy a discount is at least coming down to 0.5 fib, taking out this liquidity. That right there will be like a double-day pullback because that is quite a ways down. I don't know if that's really going to happen, honestly, but that will be even better because you'll be buying at the golden pocket area. And we'll just move this over here. So we've come, going to mark out where some liquidity can be taken after this huge move up. We are melting up in the market, and so that could continue, and that's why you're not really seeing these big pullbacks or anything, which I guess shouldn't be a surprise, but both of those parts of liquidity right there we're marking out line up with really good discount windows, so we're going to have to see if that's going to be the case coming into tomorrow. Again, if we get above the 50, start moving back up and just melting up, then you'll see some shallow pullbacks here and there. But for the most part, it'll just continue this stupid little melt up right there that's happening, which is good for your portfolio. I just prefer to actually move up in a more structural way, which I'll show you on the QQQ. And actually, the reason why I really want to see a decent pullback to one of those discount windows for sure. But again, if you see if it gets above that level right there, see that's liquidity right above it. So if it gets above there, it's probably going to move through there pretty fast, and then maybe gets 19,989, which should be a bigger problem to actually get through, depending on what's happening this week when it comes to the Fed and everything else is going to be coming out there. Because it'll be less news and less events, just really important ones for sure, no doubt about that. And when you look at this on the Qs, the reason why I would love to see it pull back again, if it was going down this bottom one, that would be like a multi-day pullback for sure, unless we have some crazy black swan event. But the reason why I would love to see that, and it's just nothing but greed on my part, is because you would have not a textbook, but you would have a really ugly type of like head and shoulders, right? And so if it came back, that would be your left, that would be your head, that would be your right shoulder, and then boom, we go from there. And it'd be much more structural, and I'd be a lot more confidence in it than what we're seeing right here with this melt up and stuff. But again, we'll see. Let me know your prediction down the bottom, what you think is going to happen there. Now, when you look, of course, what's helping here is, all of a sudden calls are getting bought up like crazy, and it's some of the biggest stocks, right? So you got Nvidia, Tesla, and Amazon, the most bullish. ARM still gets those leaps bought up from 2026, Microsoft. And so we know the option market does help drive the stock market, okay? And when you look at these, Nvidia here, you can see on the weekly what's going on. You got the bullish stochastic RSI cross. The RSI right there is above the 50 on the weekly. And look at that weekly candle. I went back and looked. You'd be hard-pressed to find one larger than that. I mean, that was just a big week last week. Above a curling up 21 EMA, which we talked about. It loves that moving average. I'd love to see some more consolidation here, because this thing's just been like 5 straight days of just moving up. It got into that gap, which we had talked about, didn't feel the whole thing. And what's shocking is the thing that this thing is already only like 12% away, okay? And that's nothing. I mean, you saw how fast it moved in like 7 days, right? And it has its earnings coming up, so that's going to be a big thing. But that isn't until the end of the month, so we got a couple weeks on that. And so, it gets in these crazy moves, and then there's just no consolidation, and that's usually not a good thing. So that's something I like to see. You can even see consolidation on that right there when it went from 90 to 140 here. Look at this, just especially those 5 days. Green, 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 right? And again, I like looking at my portfolio like that, but normally what's going to happen is you're going to get a decent pullback right there. Or it's going to create even more volatility, trying to come down and grab liquidity and stuff like that. Now, looking at Tesla, you can see it's almost like wedging here, but just waiting for it to get above that major descending trend line, which is what it rocketed past last time, and then allowed that big move up. You do have that fair value gap, which you should see some reactions. Remember, if you don't see any reactions, that means calls are flooding in, call sweeps that is, and it's probably going to plow right through it. And if it does that, then you can see it break through that next level for sure. But, looking at this, obviously, it has just kind of been bouncing off that ascending trend line right there. So if we get rejected here and come back down anywhere 206, 210 on that trend line is where I'd look for it to bounce again. And so we'll see again if it can get through that trend line right there and right there into that fair value gap. That's what I'd be aiming for. And again, the call sweeps have been flowing in for this one again. So the market is alive and again for Tesla. But it has to get through that trend line. Normally you do see a rejection there the first time, but a lot of it will have to do with, I'll get to see the futures overnight and how they react in the morning and see if that's going to be the case. But we'll see, and I'll let you know tomorrow what's going on. Now, Amazon was the third one. We talked about this one. We've updated it many times. It's in that gap. Still has room to run anywhere from 177, 185. You can see that right there even when you pull the volume profile up. So we have major problems when it gets to this area right here around 185 because you got the volume profile, which shows you where resistance is. Also, you got the 50 and the 100 moving average, okay? So I definitely expect a rejection if we get to that level. If it does reject, you got the 200 not far below, sitting around, 171, 172-ish come Monday morning and stuff. So anywhere from 171 to 185 is probably where it's going to be leading into Nvidia earnings and everything else. Now, Shopify quick update. We're almost filled this gap, very close, about $1.30 away, I believe it is. And this move has been absolutely just nuts, right? And that's why I said this is momentum stock. When momentum picks up, it picks up for Shop, okay? So, man, they're just, oof, talk about a move. I mean, this is a 55% move in 10 days. So that's a heck of a move. All right, so that's why I expect if we do fill the gap to get a rejection because the 0.79 fib is right there at the top of that level. But I will tell you this, something very important. There's 2 moving averages that are extremely important to Shop. One is a 200, which we broke above, right? And I said as soon as we break above this, it's going to go, we're going to fill this gap, okay? And we're dang close to doing that. The other one, though, is the weekly 200. It really, really respects this one as well. And so that will be resistance. I do not expect to get through it if we even get there for sure. That's sitting right now currently around 79.54. Again, it's a moving average. It's sloping downwards. And you can clearly see it respects that 200 weekly. Reject, 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 break through, reject, reject to the penny right there. And that's when we went on that major downturn, right? Bounce off the daily 200, come back up. Once it broke the daily 200, again, major drop. And so this one really respects these moving averages. And so I expect when we get there, if we get there, then I expect a big rejection right there. Best case scenario, consolidation, but I expect a rejection for sure, especially if that big move up. And you can see that's your daily. I mean, it's just freaking bouncing. When it loses it, see you later. Finds support for a little while and then rejects off the weekly 200 right there. And so these are two moving averages. If you're a shop holder, you definitely need to pay attention to, because it's going to respect them like crazy. So again, 79.56, where it's at now. We'll see what happens with shop this week, but just be keeping an eye on that for sure for a breakdown at that level if we reach it. Now, one other tip I was going to give you guys is always look for logarithmic scales on stocks you own to see if there's trend lines, okay? Because this is what you're seeing with a lot of these stocks, like Nike, for example, right? This one right here, it goes back to like 1993 or something, and it's had many bounces off of this. And it's had multiple bounces off of this right here, and it hadn't broke it since 1993, okay? And so when you look at this one, I'll show you a few others what we're talking about here. That was the 2009 crash, and then you can see recently what it do. It came down, after it dropped 60% and it bounced right off that trend line again. All right, and so again, this hasn't broke, and so you look at your stocks. I mean, I actually created a channel just for this. I need to start updating these again for sure, because especially when you start going through major drawdowns in the market, that's when you need to be looking for these. And there's many of them out there, and you'll see where stocks are going back. I'm going to show you some of these going back to the 70s, and they have not broke it. Okay, when you go over here and look at Disney, again, this one goes back to 1974, and you can see many bounces during many drawdowns. In this one, and I don't believe I'm looking at this one right. That's a 2009 crash right there. Yeah, we didn't quite reach. I think we were like $1.20 away from reaching it the first time it drew down, but now it's drawing down again. So it's just right there at that trend line. But again, that's a long trend line, right? Going back before I was even born. And so you'll see these on these stocks, and they just rarely they break, but when they do, oh boy, I mean, it is not good, right? You look at Dollar General, it goes back to 2010 right here. Many bounces, many drawdowns on this one. And this is one I talked about months ago, right? And had this huge run up. What happened? Had this meltdown. I mean, it just melted down, bounced to the penny off that trend line and had a big reaction. Now it's heading back down to it, right? So if it bounces, right, it's a good area, good risk reward, great. But if it breaks through for the first time and since 2010, watch out, okay? Now, when it comes to earnings, you can see we're going to have a lot of retailers and stuff, obviously, and some others will report stuff. But you got Palo Alto on Monday, but then you'll have Lowe's. And then you go to, and you look over here, and you have Toll Brothers, a home builder, up there after hours. Then we're going to go into Wednesday, and that's going to be a big one because you're going to end up with Target, Macy's, and then we'll look at Snowflake, which has kind of been trying to move up, Zoom. And then looking over here on Thursday, again, you'll have Baidu coming in. I mean, some of the Chinese stocks are doing okay. Some of them are not doing okay. Advanced Auto Parts, BJ is going to be another one. Then you'll end up with Kava, Workday, Bill.com, Intuit, Ross. And then Friday, I don't talk about anything. And then it comes with economic data. You're sitting here and looking at Monday, really nothing, CB leading index. Tuesday, FOMC members speak. But then Wednesday, FOMC minutes will come out. They usually get a reaction in the market. Thursday, unemployment claims. We watch like a hawk. Flash manufacturing PMI, flash services PMI. Then you got Jackson Hole starting on Thursday, okay? Fed Chair Powell will speak on Friday, and also it goes all the way through Saturday, by the way. And everybody's just going to be watching to see, what he says. Is he hinting at a rate cut, coming in September? That's going to be a big thing, okay? And again, the market's going to do what the markets want to do, right? That's just the way it is. I don't think the man's going to come out and say, yeah, we're going to do a rate cut in September. I think it's going to be data driven, right? And so we'll pay attention to those. The unemployment claims are going to be the big ones. So everybody's watching that like a hawk now to see if that's going to come in higher than expected, lower than expected, and all that fun stuff, which we'll have to do with rate cuts, recessionary fears, and all that fun stuff. But I will say, and again, like I said, you rarely do have in a presidential election both candidates come out with like an idiotic type plan or something like that, and it just rarely happens. And when I heard both of them, and Trump did it first, and then it got copied by the vice president who's running now, and they were talking about this, and I want to hear your input personally. It's like no tax on tips, no tax on tips, and I'm sitting there going, and you're talking about a guy who, look, I used to wait tables when I was much younger. I worked my way up into management. A restaurant manager, so probably 8 years total in the industry. So I know the industry. I've been there, right? But I'm sitting there going, wait a minute. One thing I remember about that job, especially as a manager, is who do servers depend on more than anybody else? It's the cooks, right? The cooks don't get tips. They're on an hourly wage. They're back there slaving in the kitchen over a hot stove. It's miserable back there, and I'm sitting there thinking, wait a minute, you're actually going to sit here and have no taxes. And I want to know, like, when they say no taxes, are we talking no FICA or anything on these taxes? What are we talking here, right? And that's how it used to be. Used to, back in my day, I'm older. So you literally, they would get cash. We get cash. I stick it in my pocket and never claim it. That's just how it went, right? Everybody did it. It was normal. And then all of a sudden they said, no, everything switched to credit cards. So they said, well, automatically, as soon as you put those credit cards in, we're going to take it out anyway. So you don't have to worry about claiming it. We're going to do it for you. But to sit there and pick tips, I'm like, what about the people cooking? What about the dishwashers and all the rest of these people, man? Because the servers make good money. If you're in a decent restaurant, I don't know about Waffle House and stuff, but especially if you're in a decent restaurant, you can make some really good money, okay? And I think one side even said they're going to cap it at a certain income level or whatever. But I'm just like, how are you going to, that's no different than what you were doing with student loan forgiveness. Like, you just wave a magic wand over this group over here, and this other group doesn't get anything, right? I mean, that doesn't make any sense to me. And you're also picking a transitory job. I mean, we all know the majority of people who get tips, they're high school kids, college kids, people waiting to move somewhere else, like me, move up into management or something, that kind of thing. And again, there's people that do it for a living. That's great. They're good at it. They enjoy it. Do your thing. But that's not anywhere near the majority. And so it just doesn't make any sense why you would. I know what they're trying to do. They're trying to buy votes. I mean, let's be real. We all know that. Okay, we're all smart enough people to realize they're trying to buy votes. I just don't understand why they're trying to buy those votes, right? I'm trying to figure out, like, why. Maybe because they're trying to attract younger groups, whatever it is. But it's like, in a way, what I hope happens is the other groups, which make up even a larger percentage, the cooks and everybody else that aren't getting those tips, revolt. What about fast food workers? They don't get tips, right? And they make less than those servers do, for crying out loud, And so I'm like, what in the world? I mean, is anybody, I'm saying, if you're, I know how it works. If you're getting those tips and you're like, this is great, I hope they pass it, and that's good for you. Again, whoever got the student loans forgiven, I got no hate for them. I think it's a dumb policy. I understand what they're trying to do. I understand the intention, because at least, like, student loans it's a ripoff scam, right? I mean, you have to pay a higher interest rate than you would for a house and stuff, which is ridiculous. Trust me, I got 3 degrees. I know all about student loans. My wife just got done paying hers off like 5 years ago, and the rates, and we got excellent credit, is higher than what we pay for our house, which is just stupid. Okay, and technically you're actually borrowing your own money because the government guarantees 90% of student loans. I mean, it's really ridiculous. But that's a whole different issue. I understand what the intention was. Just the way they executed, I thought was ridiculously stupid. But this is just another dumb program. Like, oh, this group over here, you're going to benefit. Everybody else, whatever, forget you. You're working hard out there. So you'll have literally people in different groups. This group makes below $50,000. These people get tips and make below $50,000. These people pay no taxes on their tips. So that's basically, if you're a server, that's like 75% of your income. And then this group over here is working their butt off, don't get anything, And the reason why I get upset about it, because, when you're in the middle class, and you know this, you're screwed, right? All these programs they roll out, they're for lower income and then the rich. And then you're in between the middle class, and the middle class just gets squished and gets no benefits from any of these programs, right? And so I can go on about the program part, because I'll save it for another video, not draw this out. But let me know what you think. I think it's just ridiculous. But the fact that both sides are pushing for it means it probably has a good chance of going through. And I'm just sitting there going, oh boy, I don't get that at all. So it doesn't make any sense to me whatsoever. So anyway, hope you got something out of the video. Please hit the like and subscribe button, and I'll see you guys tomorrow.